Hey everyone, welcome back to the channel and welcome to episode 3 of QuickBooks Online Basics for Beginners. Today we're talking about how to categorize transactions the right way in QuickBooks Online, including the difference between expenses and cost of goods sold, how expenses differ from liability and equity, how to split transactions into multiple categories, and how to find missing matches in QuickBooks Online. So although most transactions that you'll categorize in your QuickBooks Online file are expenses, not everything that comes out of your bank account is the same type of expense, and therefore they need to be treated differently. Regular expense versus cost of goods sold. Regular expenses are costs that you pay to operate your business, whether or not you make a sale. So things like office rent, electricity, the pens and paper that you buy. Those expenses are going to cost you money even if you don't have a job that day or have a session with a client that day. Office rent would go into a rent expense account. Office supplies would go into an office supplies or a general supplies expense account. Advertising expenses will fall under an advertising or marketing expense account. Software expenses like your QuickBooks Online subscription, Adobe, things like that will fall under dues and subscriptions or a software expense account. Keep in mind that every business looks a little bit different depending on the nature of the business and also who set it up. So your accounts might look a little bit different from another company's accounts. Cost of goods sold are costs that are directly tied to the products or services that you sell. Pro tip, if you don't sell anything, you usually don't have a cost of goods sold. These would be more service-based businesses that don't have cost of goods sold. So some examples of cost of goods sold: lumber, rental equipment, food that you're going to sell, ingredients for food that you're going to make that you're going to sell. Subcontractor labor that's also tied to a specific job would be a cost of labor, similar to cost of goods. Remember, if the cost is tied to a specific job or sale, it's usually cost of goods sold. If it's a cost of running your business, it's usually a regular expense. Now, a liability is money that you owe, not money that you spent. An example of this would be a loan payment. Only the interest portion of paying a loan would be considered an expense. The principal payment reduces the loan balance. Another type of expense could be an equity transaction. Equity transactions usually involve the owners. Examples of this would be an owner's contribution, an owner draw where the owner takes money out of the business for personal use. These should never be categorized as expenses. Payroll is another area where categorization matters. And this is because payroll withdrawals often include several types of transactions, needing to be split into multiple categories. So typically you have your payroll wages, your payroll taxes, and some kind of payroll service fee. If you use a third-party payroll processor, usually you're going to get charged some type of fee. A lot of times these will already be split up and come through as separate transactions in your bank feed, but make sure you pay attention to that because that's not always the case and that transaction might need to be split up. Real quick before I show you how to split a transaction, I just want to talk about how to decide the right category. A lot of people who are just starting out using QuickBooks Online don't struggle with how to click. They struggle with how to think. And most of the time it's just because you're trying to get things done, which I totally get. But next time you're not sure how to categorize a transaction, ask yourself these 3 questions. Number 1, is this cost directly tied to a job or a sale? If yes, cost of goods sold. 2, is this a cost of running my business? If yes, expense. Number 3, is this money I owe? Or is it owner related? If yes to one of those, either a liability or an equity transaction. Just remember that consistency is better than perfection, okay? But guess what? There's usually more than one acceptable category for things. The most important thing is being consistent from month to month and year to year. So if QuickBooks Online was categorized as a subscription last month, make sure you categorize it the same way again this month. Under subscriptions, don't switch it to office expenses. And honestly, if we had 7 different bookkeepers sitting in a room together, chances are we might get one transaction categorized 7 different ways. So try not to overthink it too much. Okay, so splitting transactions. Anytime a transaction includes more than one category, you'll want to make sure to use the split feature. We already talked about one example, payroll split, right? If it all comes through as one bulk transaction, you want to make sure you split that up. Another example could be your insurance. Maybe your general liability business insurance and your workers' comp come through in the same transaction, but you want to reflect both of those as separate categories on your profit and loss. What we can do is click on that transaction, which is showing up under our transactions for review. Once you click on the transaction, it should expand the row to show you some more options here. Side note, if your transaction is finding a match, you're probably not going to see the option for a split. So we're going to pretend for the sake of this video that we don't have a match for this transaction and we need to categorize it. Once I hit the categorize button, I'm going to see the split button down here in the bottom right-hand corner. Go ahead and click on split. This will open up a new window allowing you to add multiple categories. The first category, like we said, is going to be our general business liability. We're going to say that's $1,000 a month. The second category we're going to add is our workers' compensation insurance. This is also $1,000 a month. The two lines together equal our $2,000 transaction. This is the same exact method you're going to use if you have a payroll transaction that comes through that you need to split. If you have a mixed receipt that comes through and maybe half of it was for job supplies and half of it was for office supplies. In that type of situation, you'll do the same exact thing. Then we can hit split and add in the lower right-hand corner. As you can see, this transaction has been categorized. Let's say that one of your transactions has a match and you know that it's in your QuickBooks Online file, but it's not showing up on your bank transactions screen as a match found. This could be if you're working on a cleanup, you're working months back, and the transaction is more than 90 days old. QuickBooks usually won't show the match, even though it does exist. Another reason this could be happening is if a bill was entered with a split, QuickBooks will not auto-match it. Another scenario could be a bank deposit showing in your bank feed that's not finding a match because the payment was made up of 2, 3, 4, or 5 customer checks. If it's a payment a customer made to you, but includes 2 or more invoices, QuickBooks might not auto-match it. In other words, you'll need to select match, which might be on the left-hand side of the transaction, but in QuickBooks' newest interface, it might be a toggle over here on the right side of the screen. So you may have to select match, which will open up a screen of all the possible matches. Otherwise, if QuickBooks thinks it found your match, but you know it's not the correct one, if you click to expand the transaction, you should see a button called Find Other Matches. Once you click on that, like I said, a screen of all of the possible matches is going to open up. Pro tip, there might be some kind of date filter set preventing you from seeing any possible matches that are really old. If you want to get rid of that filter, all you need to do is just click the X in this gray oval here. You should then see every single possible match that you could make for your transaction. So after all is said and done, there are still some transactions that should be reviewed before being categorized. These might be things like large equipment purchases, vehicle purchases, loan proceeds, anything unusually large or unusual. So if you feel a little uncomfortable categorizing the transaction, wait for your accountant. Pro tip, if it needs to be categorized for the sake of getting reconciliations done, create an account, if there isn't one already, called Ask My Accountant. Anything you put into this account should be red flagged by your accountant. Also, not a bad idea to call them up or send them an email and ask them how exactly to handle the transaction. Trust me when I say this is going to help prevent serious errors, because the Ask My Accountant account is going to throw up a red flag when they see a balance in there. Okay, guys, we made it to the end. I hope that categorizing makes a little bit more sense now, that I've given you the confidence boost you need to tackle your bank transactions. If this video helped, as always, please like and subscribe and drop your questions in the comment section. In the next episode, episode 4, we're going to be talking about bank rules. Thanks for watching, and we'll see you in episode 4.